Let's say in 2000, when India's GDP was $500 billion here, our defense expenditure was $14 billion only. And we are more dependent on imports from, let's say, Russia, from France, like we bought Rafale. But that is not true. India is manufacturing a lot. Just to show some of the capabilities of India today, for example, this is a light combat helicopter. More than 40 aircrafts have already been delivered. The size of order was 70,000 crore rupees. So,
Namaste viewers, Namaste subscribers. Today we are going to meet Mr. Abhishek Poddar, Fund Manager, HDFC Mutual Fund. The context is HDFC Mutual Fund is coming out with a new fund offer, as we call it as NFO, the first of its kind in India. It's called the HDFC Defence Fund. So this fund will invest primarily in those companies that are manufacturing defense equipment and services to defense. The investment will be done in listed companies, and the fund is going to be managed by Mr. Abhishek Poddar. He has about 17 years of experience in the field. He is with the HDFC Mutual Fund since 2019. Prior to that, he has worked with the Kotak Securities. He is a BCom graduate from St. Xavier's College, and he has done his MBA from Indian School of Business, one of the reputed institutions in India. Also, he is a chartered accountant. So he has all the financial qualifications, plus the robust experience and backup from HDFC Mutual Fund. So overall, HDFC Mutual Fund as a fund house today manages more than 4.50 lakh crores, 4.5 lakh crores, more than 4.5 lakh crores. Many of the funds from the fund houses are doing well. It could be small cap or flexi cap or focus to 30. Many funds are doing well. Now let us get more information from Abhishek regarding the fund, the NFO fund. Namaste, Abhishek.
Namaste, sir, and namaste, viewers.
Yeah, welcome.
Thank you for inviting me, sir, and very happy to be here and looking forward to a very engaging discussion with you and the viewers.
Thank you. Abhishek, the fund, I mean, it's one of its kind. You are coming out, and when India is catching up with a lot of defense manufacturing activities, PLI schemes, many of those things. So, tell us something, to our subscribers about the fund, what it is about, and some of those basic details.
Yeah, sir, can I share the screen and presentation so that the details are more understandable?
Please.
Yeah, and I was thinking that for 10-15 minutes, if I can run through the presentation where I want to discuss the defense sector and then come to the fund details, that probably will clear the basic concepts and understanding.
Sounds good. Please.
Okay, sure. Thank you. I just wanted to take to the key themes and a few points about the defense sector, why now, and then coming to the fund that, what is the reason for launching the defense fund, and the main, reason for us to think about the HDFC Defence Fund today is about the opportunities which, the defense sector presents in India specifically. So some of the key points, which I want to highlight. One is that there is a misconception, around, the general populace that uh, defense is about, wars and, defense is getting highlighted also because of the Russia-Ukraine conflict. I just want to highlight that that is not, entirely true. Defense is more about, protection, and it is more about signaling the other countries that you have the requisite capabilities to defend your country. It is more about the capability building, and it is more about peace. In a way, what defense is doing is by having the capability, you are telling or giving a signal to the other countries that you are capable enough to defend the country, so please don't attack, or you will have consequences. Just an example that when United States of America, the largest, military or the most advanced military today, which spends about 40% of the defense spending, by one of the world, nobody attacks USA, right? So I think that shows the capabilities. So with that, I just wanted to highlight few of the slides about the defense sector in general, that what drives the spending in defense sector. One of the slides is this. If you look at the pre 1991 era, where there was a Cold War between Russia and USA, USSR and USA, the amount of spending that all the countries combined were doing in defense was very high as a percentage of GDP. So if you look at this part, it used to be left side. If it used to be almost 4 to 6% of the global GDP, which was being spent. This went down after the fall of USSR. It came down, you know, quite drastically, and that was because there was only one superpower, which was USA. And now what is happening is that uh, in this period, last 30 years, when USA was the lone superpower per se, to say, almost 40-45% of the global defense spending was done by one country. But there was no other country globally which had the similar military might. The military power of other countries was much lower. So in comparison, Asian countries like China and other ones were only spending 2-3% on the defense spending. Now that is changing because of the rise of the Asian economies. And just one highlight I want to say that China was spending only $12 billion in 1995 in defense. It has gone up by 25 times in the last 26 years to almost $300 billion if you look at this slide.
Yes. Okay.
Yeah, and why that is happening. Essentially, more to see it obviously is about the economy. So to think about the defense expenditure of a country, just think about a concept that the reason we are spending so much on defense is because we want to compare with what others are doing. Because if others are ahead of us in their capabilities, our country is vulnerable and exposed. And that is what every country thinks, that you have to kind of compare well in terms of ability to defend the country with other countries. So now defense is something where the technology advancement is very, very, quite at a good speed. People spend a lot of money on R&D, and every 5 years, 10 years, the technology advances. So the earlier old equipment that you have kind of becomes obsolete in the new era, and you have to replace them. So some example is like, for example, we have in India big aircrafts, Mirage we have, which were bought in 30, 40 years. You need to replace them. But the point is that it costs you a lot of money. So you have a demand for those things, but because the economy can only give so much to defense, it takes time for so as the economy expands, your ability to spend on that goes up. So as the economy expands, you are able to spend more. So what you are seeing is that as the China's economy expanded from 1995 to 2021 by a very large amount, the military expenditure also increased by a very large amount. But if you look at the as a percentage of GDP here, how much were they spending? It's been consistent, 1.7%, 1.7 and all. So the key message here is that in India also same thing, we are spending about 2.5% of the GDP. I think the key message here is that as our economy will expand, India will also be spending more on defense because they have to kind of, come in technology at par with what other large countries are doing in. So, yeah. So this is so here. I think the key message I wanted to give to investors is that the nominal GDP growth rate that India will have over next 5 years, 10 years, 15 years, 20 years, that will be the baseline growth that India will start seeing. In defense also. So in just to show a slide, let's say in 2000 when India's GDP was $500 billion here, our defense expenditure was $14 billion only. But when 2021, our GDP increased by 6 times to $3.2 trillion. Our defense expenditure also increased from 14 to $80 billion. Now, as per some estimate, the GDP will be $7 trillion, let's say in 2030, and maybe 26 trillion dollars in 2047. So we generally spend 2.5% of GDP on defense. So this number can be much higher. This number could be 150, $160 billion in 2030. In 2047, there could be 500 or $600 billion. So there could be a multiple increase because the size of the GDP is going to grow. So that is the baseline growth that we should see. Second is also a very important theme, which is very particular to India, is about the self-reliance, Make in India. Government is so self-reliance is about manufacturing in India rather than importing, and India has been a very large importer of defense equipments in the past. Like over 2018 to 22, 11% of the global arms import was accounted for India. So uh, this obviously leads to a lot of foreign exchange outgo and current account deficit. Can be avoided if we start doing these self-reliance. Second is there is a large export potential that we can see. Also, defense is critical for readiness of the armed forces. There is a lot of technological advancements which happens in defense, and if you are importing from other countries, you are always reliant on the third party for technology advancement, which they may or they may not give. So that always remains a challenge. Also, during the times of long conflict, the supply chain is very important. And if your supply chain, like the items that you want to buy, if you are importing it and if something gets disrupted, your ability to defend the country there gets limited. So that's why if you're manufacturing own, it solves a lot of problem. And that is one of the reason that we are saying make in India is important. So just to come to your answer, sir, why defense at this point of time? This slide kind of summarizes this. First is that we should see increase in defense capex spending over the next 5, 10, 15, 20 years because our economy size will keep on growing. And there is so much of demand, you have to catch up in terms of technology. You need to buy, need to increase the number of equipments you own because China and other countries are spending so much. Over the last decade or so, India's defense capital outlay has kind of grown at 9 to 10%. If you look at this chart, and that kind of forms the base of the growth. Now, where things get more exciting is about the Make in India, where we have three key drivers to growth. One is import substitution. India was one of the large importers of defense equipment until recently. Like till 2019, almost 50% was imported. This is changing because of certain policy changes. Like we have banned imports of 411 items already, and we are promoting the domestic industry. And I can discuss more in detail what policies government is doing. Second is exports have started to pick up speed. So in last 8 years, our defense exports have grown by 8 times. It used to be only 2,000 crore rupees in 2015. In 2023, it has grown to 16,000 crores. So that is a massive number. But still, we are very low, in comparison to the global arms trade. We are like less than 1% of the global arms trade. So there is a potential to grow here also. And third is that government has allowed, yeah, government has allowed private participation in defense. So what it means is that in defense, a lot of systems components like a radar system or a lot of those smaller equipments was getting imported, which is also now getting produced in the domestic industry. So other than the large platforms that is there, even the smaller equipments like radars and all getting, so that is also. So just to summarize this, in defense sector, we have four drivers to growth. One is about the increase in the economy and the increase in defense capital spending by the government that will continue. And to highlight that in last 70 years of since independence, 75 years since independence, every year defense capital spending has gone up only. So this is like a secular growth story. It is not that the defense spending will reduce in any of the years. And to add to it, because of the import substitution, because of the export growth, and because of the private companies growing, we will see further growth. So I think the key reason that we like this sector is because we think that the growth prospects for next 2 years, 5 years, 10 years, this is not a 1, 2 year growth story. This is a longer term growth story, is very good compared to the nominal, and it should grow better than the what our economy is growing. And that is where the investors, can make good returns. So should I talk about the fund now? How do you want me to progress?
Yeah, I know. So like, what is the fund with this NFO on an overall view? What you are going to do generally, where you are going to invest?
Understood. So this fund that we are launching, HDFC Defence Fund, this will be, basically investing using bottom-up approach with a deep understanding of the defense ecosystem. We have been tracking defense for some time now, and we meet defense experts, defense companies, industry leaders in defense sector, and trying to improve our understanding. So the investment
will be like investing only in defense companies, say 100% manufacturing, or even if a company say like today, to name a few, just Larsen and Toubro, Mahindra, So many companies are there. Only a fraction of their manufacturing is in defense area. So will you be investing in those companies as well, or you want 100% manufacturing or services to be in defense?
Okay, sure. So we will be investing in companies whose revenues from defense is at least 10% or more.
Okay.
Yeah. And why 10%? Because this sector is in early growth stage, and defense right now forms a lower portion of revenues of most of the companies. But we believe that in future the prospects are bright, and this revenue of 10% should keep on growing very well. So our idea is to capture the growth of defense through those companies also. So
Okay.
it will be investing in companies where at least 10% of the revenues are there
Mhm.
from the defense, but that will be for the 80% of the core portfolio. We also have another 20%, which we can invest in other companies which are related to defense, where it could be 10% lower than defense revenues. It could also be other companies which indirectly are benefiting because of the defense theme. But overall, to give a idea, this will be an India defense theme and manufacturing theme. We will not be investing in any banks or anything. It will be a non-banking manufacturing theme where people can invest to see the growth of the Indian manufacturing sector through defense. That would be the broad idea.
Okay. Okay. And here you will be investing in public sector companies if they are listed, and also private sector companies.
Yeah. So it will be only listed companies that will be investing. Unlisted companies will not invest. The reason is that one, there is a SEBI restriction, and also the liquidity is not there. When investors want to exit and sell, the
Mhm.
liquidity in the unlisted space is very limited. So we
Okay.
want to keep investing in the listed companies only. So
Okay.
total right now we have 21 companies here in the universe to invest, and out of which 13 will be the private, 13 are private sector companies, 8 are public sector companies, and among these, two are large cap, one is mid cap, and 18 is small cap companies.
Okay. Okay.
You,
So it will be so going by the number of companies, it will be predominantly small size companies, kind of right now in the universe, but they may keep adding up
they
as
make
it
it
comes.
adding up, yes, sir. So just to think about it, this is like a early growth stage sector. And think about it. What I have been understanding is that let's say an IT sector in early 2000, where the sector was small, but the
Mhm.
growth runway was very long. Here again, if you look at the kind of companies, because the sector has just been opened up, in a big manner, the companies are now small, but they're growing very well. So just to give one more understanding here, out of these 21 companies, 11 companies got listed in last 5 years.
Oh, okay.
Yeah. So we
Okay.
think that more IPOs will happen and more companies will start coming in. And in next 5 years, it's possible that this 21 number of companies will be more. So we can also participate in IPOs and yeah.
Okay. Good. So in that sense, there are, you know, say maybe there could be like 50 or 100 companies already in India manufacturing for defense alone, including unlisted companies.
Yeah, yeah. So there would be more than 100 companies in India, and many of them are unlisted and they are small in size, but they are growing very well. So generally, what we see that when companies reaches a certain size of revenues, they come to the stock market for listing. So as they grow, they should start. More companies will come for listing. In fact, as we speak now, one more company has already filed a DRHP for IPO, and that company could be coming to be listed soon. So the kind of activity which is happening is very, very quick and fast. More companies could be listed.
Okay. Okay. So there are many companies, in the pipeline in the future. They could be coming up. You talk to
Yes,
few candidates. So one more thing, in the starting itself, you are telling that it is not about going for war. It is about more protecting yourself, in the within the nation against other nations. So many people have that apprehension. Oh, I'm going to invest in a defense fund. They are doing bad. They are going for war. It is a wrong notion. As you very well clarified that today for us to remain peacefully, we have to protect ourselves. We have to spend a lot. It could be, it could be airports, protecting our airports, seaports, everything.
Absolutely, sir. In fact, I can show you one slide, and history does tell us, sir, that whichever country had a weak defense, they have suffered, and not only they, their children and their children of the children have suffered with poverty and impoverishment. All of these things have happened. So I think this is one important slide which I wanted to show. uh,
Okay.
See, India is no stranger to various aggressions or attacks where we have to defend our country. So the defense readiness that we are spending for is for conventional war as well as unconventional war, because there has been rise of militant groups also. But I think more importantly, in defense, the social factor is very important. Where defense is very important for the social well-being and maintaining the living standards of the people. In fact, there was one report by World Bank which said, so this report came out in 2016. It said that more than 50% of world's poor are living in fragile and conflict affected situation. So you can imagine that, the large part of these places where the defense is weak, the
Mhm.
people's condition, living conditions are very bad. They are living in poverty, and there is no healthcare, there is no education, there is no electricity. I'll just take a recent example that Afghanistan,
Mhm.
they had a weak defense after US left, and the government which was there, they kind of seized, a matter of 2 or 3 days, because they didn't have the defense capability. Even
Right.
imagine, sir, that if we are sleeping, with peace in night, and we know that our children have a future, a good future, because we know that our you know, capabilities are strong. Imagine that we had no defense capabilities today. Would we have the same peace of mind today in our heads?
So,
So
so
that is very important. Yeah.
yeah, yeah, sure. And one more thing that I wanted to ask is generally, whenever we say about a fund, the expectation, not a written expectation from investors. So when I'm coming to a theme fund, so generally I should be expecting little more than a diversified fund. So what one could expect, you know, as return. Of course, no one can predict. Nothing is guaranteed. I do agree. But what could be an expectation? Can we take it like generally we tell one can expect 12% over long period of time in equity fund. So what could be the expectation here, Abhishek?
So this is a growth sector, early growth sector, where we are looking for compounding over the next 3 years, 5 years, 10 years, 15, 20 years. It's a long-term compounding story. And I we believe that the growth in this sector should be higher than the growth in the broader economy, because broader economy growth will anyways be there in this sector. But in addition to that, the import substitution, the export growth, and the private company growth, those three things will be added to the growth level. So if you look at the last 5 years, the Nifty India Defense Index, which represents the sector, the earning growth, EPS growth, has been 17.5% CAGR. Annual rate has been this. It has been higher than the Nifty 50 index growth rate. My
Okay.
broad estimate, one can take, but if our economy is growing at 10 to 12% every year, that is bare minimum that the sector should grow. But sector should grow much higher because of the added advantage of three drivers, which I said, make in India. So if it grows at mid-teens to higher teens, so then that compounding one should expect. Now, compounding is a very big factor here. Something which grows at 15% for 3 years is up by 50-55% in 3 year time period. And if something grows at 15% for 5 years, it is up by 85-90% in 5 year time period. So, I one should look at the sector not for next 3 months, 6 months, because that is a very short time frame. I will request to look at the sector from 3 year, 5 year perspective, and even longer perspective. From that. But only just to highlight some risk around it is that this is a sector fund, so the risk is generally a bit higher. So one should take a controlled exposure on this, maybe let's say 5%, 10%, that kind of exposure, so that your risk is kind of in control.
Of their overall portfolio, 5 to 10% of overall portfolio, you are saying.
Yeah, yes, sir.
Okay. Okay. And generally, what is the type of investors who should look at this fund? Well, I'm putting you broad questions. just for the understanding of the subscribers, nothing but. No.
Yeah. So I think the investors who want to invest certain portion for longer time horizon of 3 year, 5 year, 10 year. In fact, somebody looking for 20 years also. Let's say for their children's you know growth of their capital, they should look at it. Somebody who needs the capital in short time period of next 3 months, 6 months, 1 year, they should maybe avoid this and so I would say long-term capital should come in this. So people who are long-term investors, they should be looking at this sector.
Looking at this. Good. One thing on the return side, the slide in front of us, it's showing, very good returns compared to Nifty. Of course, still we have to, since this upcoming industry, the returns are very good, I suppose. This is a CAGR 63% in 3 years, the defense index.
Yeah, it is a yes, sir.
Oh, like 200% in 3 years. Wow.
This is
And then in the 5 year period also, it has beaten Nifty.
yeah, like I said, the growth, it's a early growth sector where we believe that the growth will be higher than the economy. Nifty 50 is a broader index which kind of represents the economy. So the return which Nifty 50 will be delivering will be close to the nominal GDP growth rate or close to the economic growth rate. But because this sector has added levers of growth because of import substitution, export growth, so the growth here we are expecting to be better. So this may continue. Yeah, there is a possibility this may continue in
And
terms
this
of earning growth. Yeah.
Okay. And this new fund offer is already opened. You opened on 19th, if I am right. Huh?
Yeah, we opened on 19th of May. This will continue to be open till 2nd of June 2023. 2nd of June 23, end of the day is the last time to apply for this.
Okay. And then it will be kept open for subscription. It is an open-ended fund.
Yeah, so right now, as we speak, it is open for subscription and it will be opened till 2nd of June. So, if somebody wants to invest, you have like almost 13, 14 days to invest, till the time the subscription is open.
Okay. Very good. So on the, apart from this fund, I just want to understand a little bit on the defense capabilities because you might have done a lot of homework. As a fund house, as a research analyst, a lot of people might have put a lot of work and then well thought out only you might have come out with this fund. How is the defense capability of India right now and shaping up?
Yeah, so that is very interesting. And, I'll give, whenever I speak to, a lot of people who have not been tracking defense, I think general understanding is that we don't manufacture a lot and we are more dependent on imports from, let's say, Russia, from France, like we bought Rafale. But that is not true. India is manufacturing a lot. Just to show some of the capabilities of India today, for example, this is a light combat helicopter. This is called Prachand. This is now manufactured in India completely by one of the Indian companies. And there is a comparison I have made with of LCH, which is the India manufacturing helicopter, with Apache helicopters, which is made in USA, United States of America. If you look at the various parameters, India's light combat helicopter compares very well with Apache. So this, let's say the first row, this shows the meters of altitude or height till which it can climb. This helicopter can travel up to 6,500 meters above the sea level, whereas Apache can do only 6,100. Second row shows the range, how far this can do travel. This our helicopter can do 550 kilometers. The US one can do 476 kilometers only. So all these parameters, LCH compares well, the Indian one compares well. On the price tag, we are much lower. So we produce it only for 20, $25 million. The USA is selling the same one for 40, $50 million. So Indian technology and low cost advantage is doing very well. So let's say this is one of the things, we in fact in helicopters, India is mostly self-sufficient and we are also exporting. We recently exported advanced light helicopters to Mauritius, which is very similar. Second is on the missiles. India is 90% sufficient in missiles. Over 1983 and 2008, under late Dr. Abdul Kalam, uh, India missile program was developed. India developed 5 integrated guided missile: Prithvi, Akash, Nag, Trishul, Agni. All these have been developed in India now, which is being used by the Indian forces. and a lot of ordering is also happening from India and even from the other governments for exports. So just for example, that Akash weapon system in March 23 alone, 9,000 crore worth of ordering was done by Indian Army for this. There is another missile shown here, which is called a Quick Reaction Surface to Air Missile. This also saw user trial being done in 2022. Now there could be ordering done. A very large order could come for the Indian companies, let's say close to 30,000 to 50,000 crore rupees. One thing very peculiar of defense is the ordering size is very huge. It is like 10,000, 20,000, 30,000. That kind of orders happen. Another one is very, unique example. The light combat aircraft Tejas Mark 1. This is manufactured in India now. Almost 55% of the components and parts are manufactured in India also. Indian Air Force has already, yes, sir. Indian Air Force has already ordered more than 123 such aircrafts for the Indian from the Indian company, out of which more than 40 aircrafts have already been delivered. And the size of the order was huge. Yeah, the size of order was 70,000 crore rupees. So,
Wow. Okay.
so we hear Rafale more, but on the background, a lot of things are happening. Rafale is like a headline, but below the headline and below the surface, a lot of these things are also happening, which common people are not knowing. Uh,
Correct.
yeah. So India is
One more
active.
question. Yeah,
Yeah.
one more question before we finish. Is government offering production-linked incentive schemes to these companies?
No, for defense, the production linked incentive scheme is not there, but there is a reason for that, because the sector does not need it. So if you look at the sector, the one peculiar part of the sector is R&D. In fact, in the manufacturing sector, defense is the alone sector where a lot of R&D spending is done. Almost
Okay.
30,000 crore rupees every year is spent by defense sector in India for R&D. So for new companies to enter this sector is very, very difficult, and that's why the competition is very less. And in fact, if you look at world over, there are only few countries which have a very big defense ecosystem, manufacturing ecosystem, which is United States, Russia, France, China, Germany, Italy, UK. So only these countries manufacture the defense item in a big way, where India is now entering. So my point is that you give production link incentive to support the industry in terms of margins, but the margins in this industry is very decent and good. What government is doing is supporting the industry by various initiatives, like they have banned 411 items for imports. So this entire ordering will go to the Indian defense companies. As per the defense minister, when these 411 items were banned, he said that about 8 lakh crore rupees of ordering will go to the Indian companies in next 5 to 7 years. So that is another way of incentivizing the industry.
There is, readily available market, and Indian government is a major buyer. That is an added advantage. So
Yeah.
they get guaranteed money, everything. Very good, very good. Thanks for taking time out and sharing so much of information. From our side and our subscriber side, we wish you good luck for the NFO, and let people make money, let India grow, let every one of us, earn profit out of this fund. No, thank you very much, Abhishek. Nice talking to you. Probably, the next time when you are in Chennai, please do drop by our place.
Thank you, sir, and appreciate you giving me time to present this here. And if you have any questions, please drop us, and we look forward to meet you again. Thank you.
Thank you.
All the
Thank you.
best.
Yeah,
Namaskar.
all right. Thank you.